Thank you everyone for joining us for our webinar today. Today we're going to be talking about COVID-19, the Canada Emergency Response Benefit, the Canada Emergency Wage Subsidy, as well as other programs. So it's leveraging government programs and the legal risks. My name is Allison Mitchell and I am part of the Greater Kitchener-Waterloo Chamber of Commerce team. Before we start our webinar, there are a few housekeeping items that I would like to share. Your microphones should all be muted, but if you could please ensure that they are to reduce background noise, that would be great. Please feel free to ask questions throughout this webinar by typing them into the questions box in your control panel. Our presenter, Neena, will also be presenting a webinar tomorrow morning at 10 a.m. on employment law risks in the COVID-19 era, so please join us for that, especially if you have questions around employment law. And all webinar registrants will be receiving a recording of the webinar in a follow-up email. Our speaker for today's webinar is Neena Gupta, who is a partner with Gowling WLG. She focuses her practice on employment, labor, and human rights matters. Since early March, Neena and the multidisciplinary team at Gowling WLG have worked on helping businesses deal with responding to COVID-19. When she's not in the office, Neena can be found at the horse barn, shoveling manure and calming large animals. She considers these skills to be completely transferable to her day job. I would now like to invite Neena to begin the presentation.
Thank you very much. And can you hear me? Just give me a sound check.
I can.
Thank you. So welcome everyone. I intend to just do a overview of, in particular, of the Canada Emergency Wage Subsidy, as well as some of the other benefits we've heard about. I really do welcome your questions. I will try to, during the course of this seminar or webinar, answer as many of the questions. And here's the question panel. Obviously, there's lots of questions that we won't be able to get to, but we'll try to do our best. This is the Law Society wants me to tell you that this is not intended to be legal advice, but just for your general knowledge. Obviously, the application of these programs really does depend specifically on your company or businesses or individual situation, and we cannot necessarily cover all of that in a short webinar. So let's just start with a few, I'm going to try to do. So let's just start with what happens on the weekend. So on a rare Saturday setting of the Parliament, April 11th, the Government of Canada passed legislation known as the COVID-19 Emergency Response Act number 2. And it's an estimated $71 billion subsidy. And it's really intended, quite frankly, to assist employees. Philosophically, this is a way of avoiding throwing individuals onto the employment insurance or CERB regime, and also to help employers keep a connection with their laid off workers. So that's the primary goal of this legislation. However, even though that's the primary goal, the Canada Emergency Wage Subsidy, so you'll see that CEWS acronym being used a lot, is actually paid to employers, not employees. And they must have had a Canadian business number on file on or before March 15, 2020. So most employers, but not all employers, are entitled to or are presumptively eligible for CEWS subject to a number of financial criteria. So corporations, but not public institutions. And so what is affectionately known as the MUSH sector, municipalities, universities, schools, and hospitals, are not entitled to claim for CEWS. Individual employers, so if you were hypothetically a carpenter and you had 3 or 4 junior carpenters, you could apply for CEWS. a registered charity is entitled, but not a registered charity that is a public institution. And we are still awaiting regulations to sort of determine that fine line between what is a registered charity, for example, that might support St. Mary's or the Grand River Hospital. Will they be eligible, not eligible? Tax exempt entities such as agricultural boards, boards of trades, and our own KW Chamber of Commerce are eligible if they otherwise meet the criteria. Partnership of entities who meet this definition, so you can, and prescribed entities. And there are no regulations, or there's no prescribed entities, but we keep looking for those regulations. So those are who could claim if they met criteria. So who or for whom can we make these claims? The biggest question we face is if we are hiring independent contractors, people who are quite frankly quasi-employees, because while they're in business for themselves, they really act as our own employees. And it's absolutely crystal clear to date that only employees who are paid a wage and given a T4 will be considered for the wage subsidy. The other thing that's important for us to know is that if you have an employee who's been laid off and not had pay for 14 days in that qualifying period, and they're really months, but they're weird months, so I'll go through what a qualifying period is later. But if they've been laid off for 14 days and didn't have pay, you can't claim CEWS for the remaining 14 days. But if you paid a retroactive payment for these people, so you said, you know what, I know I laid you off without pay, but now that I know about the CEWS subsidy, I'm going to make up your back pay, you would be eligible for a CEWS claim. Now, interestingly, that sets up the situation where your employee may receive pay from you as an employer, and I'm assuming that it's mostly employers on this call, but may also receive a CERB payment on the basis that they were truthfully unemployed and without pay. And essentially the sense that we have gotten from the Department of Finance is this will be straightened out later. Right now, get your people back on payroll if you can. Tomorrow, when I'm talking about employment law matters, I will talk a little bit about the benefits of using CEWS and keeping people on health and dental benefits and keeping people connected to your workplace, just from an employment law perspective. But today I really want to focus on government programs that you should be considering to help you through the COVID-19 crisis. So we now know, if I go backwards, I'm going backwards, who's eligible, who could theoretically make a claim with respect to what? Wages paid to employees and wages paid to employees who've not had 14 days of unpaid unemployment in the qualifying payment. And we know that they can, in fact, be a retroactive payment. And interestingly, I just got that clarification in writing from the minister's office this morning. So we're hoping for better bulletins from the finance department. So then we have to look at, well, what is the benefit? The benefit starts with, we divide time into eligible periods. An eligible period starts March 15th, which incidentally was a Sunday, to April 11th, which was just a few days ago, and that's period one, a 4-week period. And the reference period is, you can actually compare March to March 2020, this March, over your revenues of 2019. And if there's a 15% drop, then you're eligible for a subsidy. And then period two, starting April 12th, a couple of days ago, it's an April comparison, and it's a 30% drop. Okay? And same for May, another 30% drop. Now, interestingly, I believe that if you qualify for the April period with a 30% drop, you may automatically be deemed to qualify for the May period. What we also know that didn't get a lot of press coverage is this, that it may be extended by way of regulation. So they don't have to bring back Parliament to extend it any further, up to September 30th. And that gives a clue in my mind as to what the court, or sorry, not the court, what the Parliament thinks, or at least, you know, the cabinet thinks about the economic impact. The worst of the economic impact is going to be in that period from March 15th to possibly September 30th, 2020. Any further extensions, however, will require Parliament to be. So now we know about whom the employees, so who are the eligible employers, about whom it's the T4 employees if you have a revenue drop in certain periods. Now, one of the things that we first knew is that it was going to be a 2020 comparison to 2019 and so on and so forth, which didn't really work for a lot of businesses. And interestingly, didn't work for a lot of my growing companies or my startups who may not have even existed in March of 2019. One of the things that you can look at also is a average of January, February 2020 revenue. So you take your January plus your February 2020 revenues and compare it to your March or period one, March, April, and May revenues. 15% drop required for March, 30% for April and May. So that was the attempt of the government, who is quite frankly making legislation that normally would take 12 months to refine in a couple of weeks to try to deal with concerns of younger startup businesses. Now, couple of things. The revenue is the revenue from a business carried on in Canada, whether foreign owned or not. So big question used to be, well, if we're owned by the US or owned by a German company, will we be eligible? Yes, but excludes extraordinary items and amounts on account of capital. That's a concept for the accountants on the call. They will understand what that means. So, and special rules are for entities who sell to non-arm's length entities. And what that means is think of a parts manufacturer, and let's assume they are wholly doing business. I'm going to pick an area. Let's say in Tavistock, or they're in, you know, Elmira, and so they're a business in Canada, but they sell 100% to a non-arm's length entity, which could be another entity in Canada, or it could be a US entity. There are special rules to deal with how you are going to figure out whether or not they are eligible. And the concern from the government's perspective is these non-arm's length transactions that we have can easily be manipulated. On the other hand, many of these businesses, like the hypothetical parts manufacturer, have in fact suffered significant revenue decreases. I get a lot of questions about, well, you know, we are, you know, a family of companies, and how should we deal with it? And if you normally have used consolidated financials, then you elect whether every member is going to measure their own and revenues on a separate basis. And you can do that, but then every entity has to do it on a separate basis. So you cannot have a situation where hypothetically you group, you know, really lousy performing entities with somewhat better performing, and then you have a singular choices, single companies. You have to make the election for every single entity in the group, or you can choose to file on a consolidated basis on behalf of every member of the group. I'm not going to go into details, but there are special rules for joint ventures and partnerships. And as I mentioned before, if you are an entity or you belong to an entity that is tied to selling to a non-arm's length entity, there are special rules that you will have to review. Okay, so just a couple of comments. The reason why there's still concerns about revenue reduction and the measure of revenue reduction is that whole concept works really well for point of sale businesses. And what I mean by that is, think of any retail enterprise. You go in, you have your groceries, you pay right away, and you can measure on a day by day or hour by hour basis the impact of COVID-19 or any other temporary shutdown. For other of my clients, and many of you are on this call, it's not so simple because there's a significant lag between when the orders come in, when the orders are processed, when the orders are shipped out, when the orders are actually invoiced and the revenue is recognized. Now, the accountants, and one of the things that I've often said is you have to make best friends with your accountant, because your accountant may be able to use a different way and legitimately use a different way of recognizing revenue in order to legitimately establish that you have suffered that 15% decrease in period 1, which covers the last 2 weeks of March, and the 30% decrease in the period that starts April 12th and thereafter. So that kind of gives you a sense of who is eligible with respect to whom, which is employees, and what the threshold, which is the revenue reduction, is, 15 or 30%. One other comment is, once you use a methodology, either January or February, or you use the average, or you compare to the previous year, you have to stick to that methodology. A couple of things that my clients are telling us is that, you know, to a certain extent, we don't know. We're paying wages now, but we don't know whether we're going to meet the threshold loss now. And I can see that that's a difficulty that I don't have a way of easily dealing with, because you cannot wait to receive the CEWS subsidy in order to pay it. You're paying it out of your own revenue or borrowings or reserve funds in order to then justify your CEWS application. I have a lot of clients that are charities and not-for-profit who are trying to figure out how to determine loss of revenue. But one thing we know is that they can choose to include or exclude government revenue. And the reason for that is government revenues may well be static or grant-based, and so it may not show the loss in business and or membership dues and or donations. So we're still awaiting regulations to help us understand how best to help charities and not-for-profit. Couple of things that some of you may face is we're still struggling as to understanding what happens if an employer uses a third-party professional employer organization or labor supplier, right? So it does not show up for those employers, and assume they're doing this 100%. They don't actually have T4 employees per se. They get a bill from the third-party supplier, which they pay, and the third-party supplier then has T4 employees. And so there's not a lot of clarity in my mind as to what happens there. I suspect it's actually going to be the labor supplier or the professional employer organization who may be eligible for CEWS. Unfortunately, there is no relief for pre-revenue entities, and some of the people on the call may be familiar with some of the companies that are doing amazing things with Unitech and the Accelerator Center, and they may have access to small business loans that are being established, but they are not going to be able to meet the criteria for CEWS, because if you have no revenue, it's hard to show that you have a drop in revenue, if that kind of makes sense. So people want to know, well, what is the amount of the subsidy? And it's actually, if you read it, and I spent a good deal of my time yesterday reading it, it's actually complex, but I'm going to take you through some examples. But I want everybody in the call to understand that there is effectively a maximum subsidy per week of $847 per week. And that's a maximum regardless of whether you pay an employee $100,000 or, you know, something much more modest. That is a maximum. 75% of the amount of eligible remuneration. So that's one test. The other test is you have to look at the employee's pre-crisis weekly, 75% of the employees' pre-crisis weekly remuneration. And in many cases, it'll be the same, but many of my employer clients have had to institute wage cuts or wage reductions or reduced hours. And so the remuneration actually paid in the period is less than the pre-crisis weekly remuneration. So why do we care about what they were paid before? And the reason why we care about that is the government did not want employers for increasing low and mid-level earners compensation in order to take advantage of the wage subsidy. So it's kind of a 847 is a threshold, and the 75% of employees pre-crisis weekly remuneration is another test. And that test, 75% of employees pre-crisis weekly remuneration, is also very important if you have non-arm's length employees. So that is, let's say, an owner manager, a shareholder officer who is on the payroll. This becomes a real test. Did you pay this employee who's non-arm's length on payroll? Yes. Well, what did you pay them? And of course, it's designed to prevent you from an employer from adding all their family members onto the payroll and then claiming wage subsidy for them. So this is all very confusing, I find. I've got some more slides on this. I just want to emphasize a few things. At this point, it's 12 weeks. Maximum is 847. So the maximum subsidy per employee is 10,164. Now it could be extended further, and obviously there would be a proportionate increase in the per employee subsidy. Another thing that's interesting, in some cases, the CEWS subsidy may cover 100% of the remuneration currently being paid to the employee if there's been a big drop. And in some of my places, people have dropped down to 3 days a week or had to have a fairly significant pay cut. One other, or the third thing I wanted to emphasize, and these slides are going to be circulated as well, is a business owner or non-arm's length person was compensated by way of dividend, i.e. not T4 income per se, but just a return on their equity. They would have no pre-crisis employment income, and therefore you could not get CEWS for that owner, operator, shareholder, even though they're clearly working in the business very hard to keep it going. Other things I've been asked in the past is well, what if we had, planned to increase somebody's remuneration, but didn't actually get around to doing it? That will not be factored into the calculation. So you can always pay people what you promised to pay them, or the pay increase if you can afford it, but you will not necessarily get the increase in pay recognized in the CEWS subsidy. Alice and Christine, I'm wondering if there are any questions, because I'm going to do something very hard now, which is do math by GoToWebinar.
Yes, we do have some questions. So first question, for the definition of wages paid from January 1 to March 15th, there appears to be an advantage to those companies who have a 3 pay period month in January or February. Can you confirm it is remuneration paid and not to be remuneration earned?
So if actually, and why don't I hold that question and I'll give you an answer later on, but in general, it is, it's in respect of the period. So what that means is you have to look at what you've paid for these people in respect of January 1, 2020 to March 15, 2020. So that's the lens, but I will try to get I might just email you an answer later on, because it certainly wasn't intended to give people an advantage just because of the vagaries of your pay cycle, weekly, bi-weekly, and when your pay cycle starts.
Okay. So our second question, with regard to CEWS, what sort of information will the government be asking for? Will they be asking for detailed information on each employee in terms of compensation?
We don't have those regulations yet, but we anticipate that it will be done on some kind of similar to an Excel spreadsheet with backup documentation per employee, because you're seeking a subsidy per employee.
Okay. Would CEWS apply to companies with multiple owners who all take a wage?
Yes, so that's a great question. So you've got a company, and let's assume they've got 5 co-owners, and they all historically from January 1 to March 15, 2020 have paid themselves a regular wage or a wage. They are entitled to be included for that CEWS subsidy.
Okay, great. Another question. An employee has been earning the CERB and now the employer is applying / approved for the CEWS. How do the two programs interact? Will the employee need to pay back the CERB?
I believe that the employee will be required to pay back the CERB. I really do, but that is my belief and the belief of the sort of multidisciplinary team that we've assembled of Gowling WLG and others in the industry. But how that's going to be done is unclear. We've been told time and again, compliance and figuring out duplications and problems are all going to be dealt with at the back end. The government's primary concern is getting cash flowing through the economy, despite the horrendous impact of COVID-19, not just on our health, but on the health of the economy as well.
Great. What, if any, assistance is there for solopreneurs, for example, chiropractors, interior decorators, piano teachers, etc.?
So if they have been payment, so some of these people have actually, kind of incorporated a professional services corporation and paid themselves a salary, and they may well be eligible for CEWS, but many of them, unfortunately, will not if they have just shown it as income from self-employment, and they will unfortunately be only eligible for a CERB payment if in fact they meet the current requirements of the CERB, and I'll go into that a bit later. They may also be eligible for a small business loan, and although the focus of this is really on the, subsidizing your employees, the small business loan that they have announced is up to $40,000, interest free, backed up by the government, and if you pay it before December 2021, I believe, you only have to pay back $30,000. So those are the kinds of benefits that are available to the self-employed. You should know that our firm, along with a number of other business organizations, really lobbied hard to have benefits paid to the self-employed, and we did not succeed.
Okay, thank you. So we've got more questions in the queue. Did you want me to continue asking them, Neena? Or
no, I thought that was a good break from math, honestly.
Sure.
So I'm now going to go into math. I'm sure I'm not a math teacher, but I'm sure that after I do some of these examples, which will be circulated, people will want to ask more questions. So sure. I'm just going to go back, but thank you very much. So I wanted, and I apologize because I realized that as this shows on the screen, it's not the best view, and it's, I'm not a good tech person. Let me just see if I can get a slightly better view. I know that this isn't the best view, but it actually shows the entire slide. So I'm going to do that just because you do need to see the entire slide. So my first example is somebody who normally earns $50,000 a year, and that translates, if you divide 50,000 by 52, you get $962 a week. And I'm going to ask you to assume that this business is going to keep the person employed, like is actually going to work, at $962 a week. So nothing changes for this employee, but the business has met the criteria of a 15% revenue drop or 30% in period 2 and period 3. So how do we do it? First of all, it's a greater of 1 and 2. So 1 is a 3-part test. First, 75% of amount actually paid. 962, 722. You have calculators, I double checked, you can check it again. 847, which is that maximum threshold, and 0 if you're non-arm's length. Okay? Ignore the 0 for these examples. That's part 1 of the test, and we know it's 722. The second part of the test is actual compensation paid. That should say in paid, right? So that's 962, actual paid. And so least of 75% of the pre-COVID period. Again, that 847. So not surprisingly, the numbers come to 722. If you had a 20% reduction in salary, that might be just a straight across the board 20% cut, or maybe your hours have been reduced by 1 day a week, then you would have, okay, fine. It's 769, it's 75% of what you paid post-COVID, 847, nil. Then that's your first part of your exam. Then you have to do the second part, which is what did you actually pay, 769. Then you see what is it that you actually paid on average, 75%. That's the pre-COVID test, 722. And again, that threshold of 847. We're nowhere near the threshold of this one. So this one, I'm just going to type. Oh, I can even type. Oh, this is so fun. You guys can watch me type. Pre-COVID. So you would get for this employee for whom you have cut 20% in salary is 722. So in both examples, you're getting 722, and 722 of 769 is a much higher ratio of subsidy than 722 over 962. I'm not saying you should do this. I just wanted to work out some examples for you. So I've worked out a similar example. This is a higher wage earner in your workplace. It's $100,000. I've gone through the example, and in this case, and I won't do it, every single time, but you'll see that the threshold becomes the least in part 1 of the test, least in part 2 of the test, and even with a 20% reduction in salary, it becomes at 847, it becomes, you kind of hit that threshold. That's the max that you're going to get for somebody with 100,000 annual salary. An interesting example is somebody at 58,700, and this is an important number. You may have seen it in some of the literature, because this was the archetypical test used by the government. So this was like 58,700 annual salary, and needless to say, that works out to 1,129 per week. When you start doing the calculations, not surprisingly, because the government used to use this as a paradigm case, the threshold of 847 and the 75% end up being the same. So this poor guy gets, or this company gets 847 per week for 12 weeks if they qualify for this person. If this person suffers a 20% reduction in salary for the reasons we discussed earlier, you do the test and it becomes, okay, well, you're paying $903 a week for the part 1, okay, $677 a week, $847 or nil, the less of that is $647. And here's the interesting point. $903 is what's actually paid. 1129 times 75, 847 based on pre-COVID compensation, and then 847 the threshold. So this person is going to get, or employer is going to get 847 for somebody who they're paying $903 a week. And this is for somebody who's much lower, and I wanted to use this example, $40,000 in annual salary. And we've done the same exercise here. And you will see, I just want to share, is that their subsidy is $576. Now I'm going to actually take the final one, because this was where somebody's paying a 40,000 salary with a 40% decrease. And that sounds significant, but there are a lot of companies out there that really only have 3 days out of 5 for work because of the reduction in demand due to COVID-19. And in this case, what is very interesting is if you take a 40,000 annual salary and you reduce the pay to 40%, it becomes 461 a week. And so here, and I forgot to do the red, so I'll do it live. 461 times 75 based on post-COVID, that looks like 346. But you have this other test here of what is actually paid, right? I'm just going to change that if I know how to do it. I'll do it later. That's the actual paid, or the 576, or the 847. So you would get 100%, because you can never actually get more than what you actually paid. So you would get actually 100% subsidy for this person. So that is, kind of how the subsidy works. Now, Trudeau has spoken and said we expect best efforts from people to pay the balance, but we don't have any regulations of how best efforts will be tested. Many of my clients are trying to conserve cash because fixed expenses are significant, and we don't know when recovery will actually start. We don't know if this 12 weeks of wage subsidy will be continued. We think it might be because of the potential of extension to September 30th. And no one is actually saying, oh, the recovery is going to start on such and such a date or such and such a time. And so people are trying to stave off bankruptcy. So what is best effort? I've had clients who say, look, I don't know what's in the future. If I don't need this cash, because things bounce back in a V curve really quickly, I'm happy to pay employees some kinds of bonuses, but I'm not really able to do that right now or make that commitment right now. So I can't tell you what the best efforts test will be. One other thing that I wanted to remind everybody, and which didn't get as much publicity as I thought it should, is this subsidy is available for employees who keep working, but it's also available for employees who are on layoff, who are not working, and are still being paid. So there's an added incentive for you to put your people on layoff back on the payroll, and that is employer CPP and EI, and also in Quebec, certain CPP payments will also be reimbursed through the Canada Emergency Wage Subsidy. So that is, in my mind, you know, it's just kind of a nice recognition that you don't have to do certain things, and this is incentivizing you to do something. One thing that also didn't get any publicity is many of my clients, when the initial COVID-19 closures hit and reductions in demand started, is they thought about EI work sharing. EI work sharing, for those of you who don't know about it, is simply a program which is intended to allow you to share work that is available amongst a group of employees, and those employees can be treated as partially unemployed and receive EI benefits for the portion of time that they are unemployed. So think of a work unit, let's say a plant that is essential but has suffered a significant drop in demand, and so they are working, let's say, 60% of their normal hours. Theoretically, in my example, they could get EI work sharing for 40% of that time. There's some formalities and stuff we can talk about later. However, any amount received by an employee for EI work sharing reduces the amount of wage subsidy to you as the employer. So you've got to run the numbers. So remember I said that, you know, your accountant has to be your best friend. That is definitely the case if you've been doing EI work sharing. A couple of things is the eligible remuneration is salary, wages, other remuneration such as bonus and commission, but would not include retiring allowance, so that lump sum that you pay upon termination, but interestingly may not exclude pay in lieu of notice that's paid by way of salary continuation with all benefits maintained. So that's something that you would have to talk to your lawyer if you are being forced to think about terminating somebody. It does not actually deal with stock option benefits or certain non-cash benefits such as health and dental. So those are things that you will work with your accountant on. You can, in fact, claim, this was a big issue, particularly since we're still hoping to have a summer hiring issue. You can claim the subsidy in respect of remuneration paid to new employees if they are arm's length hires, but there is no subsidy if you're adding family members or non-arm's length people. And unfortunately, there's no independent, if you've been treating yourself as self-employed or independent contractors, there's no wage subsidy, like I said, that those people will rely on CERB. So people ask me, can I apply now? How do I apply? We anticipate it will be applied through your CRA account online within 2 to 5 weeks. The government's been hinting that it's closer to the 2 weeks than the 5 weeks. And that's all we know right now. One other word, CEWS is taxable. So this is considered to be taxable income, but of course, you will get a deduction for the amount of remuneration you've paid. And it will reduce certain tax credits such as SHRED because of the way that government assistance is treated in those programs. A word regarding penalties. So right now the focus is getting money to people who need it, but compliance will exist and it will be at the back end. For those of you who do tax work, you've heard the general anti-avoidance principles that will apply i.e. if you have an artificial structure that's designed solely to try to take advantage of this program, it will be disallowed. And you will be required to repay amounts. And if they feel that it's fraudulent, you can have penalties of up to 25%. Another compliance matter that I want to mention is if you have related employers who split an employee's time, you cannot receive more than if you had been just one employer. So next steps for employers is really getting your documentation together, trying to figure out how to prove that revenue reduction. I really believe that you need to make best friends with your accountant because you'll need some assistance in trying to determine whether or not you're eligible. And if you are eligible, what is the best way of proving eligibility? I've talked a little bit about how it interacts with EI. We have forgotten because the CEWS subsidy of 75% is so significant that we've kind of forgotten about the 10% wage subsidy. And the 10% wage subsidy is really useful for two reasons. It's limited. It's really intended to be for small businesses and small business corporations that have a payroll between $50 to $1 million per annum. But the advantage of the 10% wage subsidy is that you can offset that right away from any remittances that you otherwise owe the government. So it immediately really helps your cash flow right now. You don't have to apply. However, if you are a small business that also qualifies for the CEWS benefit, then you have to know that the 10% wage subsidy will reduce the CEWS subsidy. In other words, you can't get 75 plus 10. The 75 is the maximum. If you qualify, you may have done some good efforts to get that 10% wage subsidy when it was first announced, but all it means is that it reduces your CEWS subsidy that you will get through the CRA application later on. Couple of things, I won't go through this in great detail, it's more for employees, but essentially employees who are already on EI continue to get EI. Employees who are not laid off but are maybe on some other type of EI, such as pregnancy, parental, compassionate care, regular EI. Also, if they're laid off or terminated before March 15th, regular EI. Laid off or terminated as of March 15th, they get that CERB benefit of $2,000 per month first. And employer cannot get CEWS payment for an employee who has not received. So that's that 14-day layoff. If you've got somebody with 14 consecutive days in one of those qualifying periods, you can't get CEWS. So I'm encouraging my employer clients who want to do this to think about a retro payment so that they can pay. All right. We've talked about CERB a little bit. Everybody asks me, can people work a little bit? I need people to work a little bit, but they don't want to risk their COVID emergency relief benefit or CERB. Trudeau keeps announcing it. I waited and waited to see if any legislation would be enacted about it. Hasn't been done yet. Everybody knows about this. I am not the only one who's raised it. My firm is not the only one who's raised it. The Globe and Mail has talked about it. Please note that CERB is being paid even when EI benefits might be higher. EI benefits are about $573 a week. CERB is roughly $500 a week. It's a bit less actually. It's $2,000 a month. But despite that, they're just going to get EI. So there's a really interesting dynamic going on, which is people who are at the low end may actually be making just as much through CERB as they are working. I've had situations where employees have asked to be laid off so that they can go on CERB. One benefit of CERB is that it does not reduce your EI benefits if you ultimately need EI, but a difficulty with CERB is that employers cannot top up CERB like some employers do for EI benefits. It is taxable, but there is no clawback. So unlike EI, where there's a clawback if you earn, I think it's more than, I'm going to do this from memory, about 65 or 67,000 from all employment income in the year. You may have a clawback. There's some exemptions, but we won't go through it. I've got a couple of slides on work sharing that I'm just not going to cover. If people have questions, I can deal with that. I've got one thing I will say is if you're going to do work sharing, and that's largely going to be for companies that aren't going to make the eligibility criteria for CEWS, here's the correct form. There's lots of outdated information on work sharing on the website, at least even as late as yesterday, simply because things are changing so fast that bulletins cannot be updated quickly enough. I've spoken about subs, which is an effort to try to top up EI benefit. I'd love to be able to top up CERB benefit. We've talked about it, people have written about it. It just hasn't yet gotten the attention of the government. But if you think you might want to top up stuff, I recommend that you start the approval process now because you are entitled to top off from today. Like if you apply today, you can theoretically, once you're approved, top up your employees from today's date. And there are still a lot of employment law issues, which I will go through tomorrow, including breach of contract, constructive dismissal, class actions, union actions, health and safety complaints. So we can talk about that all tomorrow. Allison, Christine, I'm wondering if did the math cause great anguish? Do we have lots of questions?
There was not great anguish. We actually had a comment that said that the math was very helpful, so that's good.
Thank you.
But we do have some questions that have come in kind of about various parts of your presentation. So are you okay if I go ahead and ask?
Yeah, for sure.
Okay. So there's been a couple of questions around family members working at family businesses. So one question in particular, what is the quote unquote fine print in the area of new hires? So could a family business hire an immediate family member and be covered by CEWS? And then the other question was, as long as they're already on payroll, are family members eligible for CEWS?
Okay, so let's just take that second question first. So if a family member is already on payroll, like your 16-year-old daughter is, waitressing in your restaurant or pulls a few retail shifts, then yes, you can actually get CEWS. And if you remembered, one of the things that you have to, I'm going to see if I can quickly find those slides. So just, those calculation slides. But if you look at all the calculation slides, it's a two-part test. And the two-part test is actually going to be a one-part test for family members. It's going to be the lesser of the actual amount paid, the 75% of pre-COVID compensation in that Jan 1, 2020 to March 15, 2020 period, and 847. So every time you have a non-arm's length person, you're going to have essentially the lesser of amount actually paid, the 75% of pre-COVID, or 847. But if your family member was not on payroll January 1 to March 15, 2020, I believe that you will not be allowed to add that person on. And that's unfortunate because, again, and if you have an industry organization, you might want to sort of push them on it. In agriculture or seasonal jobs, there may actually be work for your, family member, let's say your son or daughter, in the summer months or the spring and summer. So think about a family-owned camp or a florist shop, a nursery. where the busy season is at May, June, July, August. So you have nothing or very little to do January to March, and then you have lots to do. And unfortunately, with legislation that is built in 2 weeks, that should have taken about 12 months, those kinds of family members will likely not be eligible for CEWS unless there's a lot of lobbying that goes on an industry-wide basis. So this is where you write your MP, you write the finance minister, you write your industry organizations to lobby for legitimate family members who legitimately do work and are now not going to get the subsidy that they would ordinarily be entitled to.
Okay. So another question. If someone maintains their regular hours and regular wages, CEWS can still be applied. So that's the question. She's asking for confirmation. Is this true for hourly wage earners as well, or strictly for salary employees?
No, this is for both hourly and salary. So if the company can prove that 15% revenue drop in period 1 and a 30% in period 2 and 3, then it's for all employees, whether they're hourly or salary. Good question.
Okay. And a clarification question here. The question is, I do not believe that 50,000 to 1 million payroll limits apply to the 10% wage subsidy. He thinks that this applies to the 40,000 loan program.
Okay.
And then asked for clarification.
Okay, well, I thought it did apply to the wage subsidy, so why don't I've got a couple of follow-ups, so that's something that I will follow up as well.
Okay.
Thank you very much. I appreciate that kind of input. So if there's appreciate that, this is like a little bit like being in law school, because it's like you're learning a new area of law every week. So yeah, I really appreciate that.
Okay. What if you, meaning the business, are offering CEWS, but some employees want to remain on layoff? Will this affect eligibility for CEWS?
No, so you can, so a couple of things. One is you can have part of your workforce on layoff for legitimate reasons and then claim CEWS for the balance that you've kept on your payroll. There will be a number of employees who legitimately need to stay on layoff status, which is people who are in quarantine or people who are taking care of kids or the elderly. So they're legitimately going to need to stay on layoff, and you won't get the CEWS for them. A much more interesting question that I think we'll talk about tomorrow is where you have employees who don't want to come back to work or don't want to be paid because, in fact, they're going to get paid less by you than they could get on the CERB. So that we'll leave that one for tomorrow. That's going to be an intriguing hypothetical to go through.
Okay. Will CEWS be applied for across the entire payroll for the period or on a per employee basis with individual applications for each?
I don't know how the application form is going to look because they have not published it. I assume they're going to want some kind of breakdown per person, but I can't imagine that they're going to see that you're going to be like, if you have 1,000 employees, I don't think you're going to sit there and have you to do 1,000 applications. I think there should be one application uploaded with a schedule that shows who you're applying for and how are you doing, for example, the application that's on the screen right now.
Okay. Another family member question. If a family member was a contract employee before April 10th, can they now be hired and paid under CEWS?
No, this is a constant question. Doesn't matter whether it's a family. If you have not been paying T4 income to this family member or any other person, you can't convert them to well, actually, let me just rephrase that. For a family member, I don't think you're going to get away with it because it's, remember I said, what did you actually pay? The lesser of pre-COVID compensation, and that is before compensation. So the pre-COVID compensation for this person would be 0, so you wouldn't get the CEWS for that. But what if it were an arm's length independent contractor? Let's leave that situation, they would be treated as a new hire, and assuming that you're paying that new hire like a bona fide arm's length compensation, let's say it's a 20 bucks an hour and that's market rate, query whether or not you could convert your arm's length independent contractors to employees for a period of time. I think you might be able to get away with that. We'll know more in 2 weeks when the portal opens.
Okay. If an employee works a few hours, can they apply for EI instead of the CERB?
No, not yet. And this is the problem with the CERB benefit. And Trudeau gets, sorry, I won't be political. I appreciate that our politicians are busy, but he announced over a week ago that he knows this is an issue, and he could, and we haven't seen any change. But I'm telling you that every member of government knows it's a problem. Interestingly, for those of you who are political junkies, I watched Pierre Poilievre's press conference yesterday. He was the finance critic. He identifies that an issue. I have to believe that with all of us identifying this as an issue, they're going to fix it.
Right. Okay.
And on that hopeful note, shall we wrap up?
I think we should. So I want to thank everybody for joining us today, and thank you, Neena, for being with us. We appreciate you sharing your time and expertise to help the business community through this difficult time. To our attendees, you will receive a link to this webinar in a follow-up email, and there is a reminder to join us tomorrow for Neena's second webinar that will be focusing on employment law risks in the COVID-19 era. And I want to thank everybody for joining us today.
Thank you.
Thank you, Neena.
Bye. Have a great afternoon.
Bye. Thanks.